If you're seeking a ground-up construction loan for a residential investment property, you now have a ton of options with private lending. In this video, I'm going to cover the typical interest rates for residential construction loans, how the construction financing landscape evolved in 2020, and how to find direct, private, hard money lenders that provide ground-up construction loans. I'm Butani, CEO of PrivateLenderLink.com, where investors and brokers can easily find direct, private, hard money lending companies throughout the United States. If you're in the investment real estate business and want to gain insights into private mortgage lending, subscribe to our channel and get notified every time we release a new video. Ground-up construction financing in the private mortgage world used to be difficult to find and offered only by a small number of hard money lenders that had the risk appetite and the expertise to manage them. And most of those lenders would only consider construction projects in their local market where they have boots on the ground, so in case of a default, they would be able to take over the project and take it to the finish line. Real estate investors that built single-family homes or small residential developments over the past decade could typically expect to pay around 10% to 13% interest plus 2 to 4 origination points. However, the post-pandemic housing boom created a huge appetite for new homes, and Wall Street saw an opportunity. Institutional capital had already flooded the private lending space before 2020, but it was mainly focused on fix and flip loans, and construction was a very limited offering. In early 2021, capital providers got more comfortable with construction lending and opened up the floodgates. All that additional capital paved the way for ground-up construction financing to go mainstream on a national scale. At the time of this recording in May 2021, private lending companies listed on our website are advertising interest rates as low as 8% plus 2 points for ground-up construction. This pricing is similar to what many lenders charge for fix and flip projects or a refinance bridge loan with no value add. And the lender doesn't have to be local with boots on the ground. They can use third-party construction management firms to oversee the project and the inspections across the country. Another thing that's remarkable about the new construction financing programs from private lenders is it could include the land purchase and horizontal development. Historically, most lenders would not even talk to a developer until the project is shovel-ready. Now, there are many financing options to purchase the land, get it entitled, and break ground, all with the same lender. For those of you who are not familiar with the whole institutional capital thing in private lending, I'll provide a very brief explanation of how it works. Many real estate investors and brokers may not be interested in this, but it's helpful to know because it will have an effect on pricing and lending guidelines in the future. All of those smaller local private lenders that have offered ground-up construction loans for many years are likely managing a small mortgage fund backed by individual accredited investors, or they use a bank warehouse line to recapitalize. But being able to offer construction loans on a national scale is made possible by one of two capital structures. The first one is a mortgage fund that has been able to attract so much capital from hedge funds and private equity firms, and it grows so large that they have no choice but to go national. There are only a handful of construction lenders in this category. I know one private mortgage fund that grew so large it became a publicly traded REIT. That company is 100% focused on construction loans, and their pricing has been similar to those small local lenders because they haven't had much competition in the past several years. What's really pushing down interest rates for construction loans is the secondary market. What that means is many lenders are funding a construction loan and then selling to an institutional note buyer that acquires hundreds of loans from private lenders across the country. So as long as there is a large appetite for construction loans from these Wall Street-backed firms, there will be lots of competition for ground-up construction. However, institutional capital moves with the capital markets. When there is a major economic event, the appetite will change, and so will the pricing and guidelines. The small local private lenders are generally more consistent over the long term, but for now, they will likely have to reduce their pricing to compete with the institutional capital. Ground-up construction financing is extremely risky, and there may be many challenges ahead for lenders if the housing market cools down. With construction interest rates on par with less risky loan types like fix and flip or rental bridge loans, you have to wonder if this is just temporary or if it's a new normal. Whatever the future holds, the lower pricing is great news for real estate investors who are building new homes. And if you're looking for a private construction lender, use our website PrivateLenderLink.com as a resource. There's no fee to search and no registration required. From the loan type list, select residential ground-up construction and enter a state or a major metro area. Browse the list and use the filters if needed. Click on each lender's profile to learn about their guidelines, rates, fees, and much more. The interest rates and other guidelines at the top of the lender's profiles will likely apply to several different loan programs, so scroll down the page to learn about the construction loan criteria. Some lenders have a loan programs page with additional details about their ground-up construction program. When you're ready, you can reach out to each lender by submitting a loan form or a simple email form, or you can call the lender to discuss your loan request. If you found this video to be helpful, please click the like button, and be sure to check out our other videos about private and hard money lending. Thank you for watching, and see you in the next video.